Hey traders, Raghee here, and in this free recap video, we will be covering the VWAP, the volume weighted average price strategy that we're using to handle the current volatility while day trading the index futures. So what do I mean by all that? Well, ever since October the 10th, we've seen that large increase in volatility, and it basically blew out of the water the old price movement range expectations that I had been using. And this tool, the price movement range expectations, are historically based. They go back 6 months. And what happens is when you see a sudden increase in volatility, we don't have enough time or data to let these adapt to the new reality. And this is the data here, price movement range, and looking back again with a very powerful historical relevance. But again, sudden shifts in volatility will completely disrupt this until they basically recalibrate or catch up, right? But in the meanwhile, we go to another tool. So think about it this way. It's the same strategy that some of you might have seen me use in the chat room, or maybe you see me cover day trading and other free recap videos. But rather than using the hourly price movement range calculation, what we're doing instead is we're looking at the volume weighted average price, which is much more adaptive. I'll show you two of the trades that we put on in the chat room. One was a trade about 20 minutes after 11 Eastern, and that was a trade that allowed us to take advantage of a move up into the resistance right up in here, or the upper bands of the volume weighted average price. Now, some of you might notice there's two of them here. And the reason there's two is I use not just the standard deviation, but I also use what's known as a maximum permissible deviation. Okay. And when you use both of these, you end up with two lines, not just a single line. So this might look a little bit different than your typical standard deviation, but these are still pretty generic and easy enough to find tools. And for those of you that are members, the version that I'm using here on TradeStation, I share in the resource folder that y'all have access to. Now, here's how you use it, because everyone can get a hold of a VWAP, volume weighted average price. So when the market moves up into this zone here, we're looking for potential exhaustion. Now, there's a few things I recommend in terms of the zone here. I want it to, you can't have it crossing. We prefer to have a nice horizontal space, no crossing of one line through the other. That invalidates this. And we also want it to correspond with the expected price movement range. In other words, we want to get up into the volume weighted average price zone. That's the first step. Then we want to confirm that there is an expected price movement range high also kicking in. And then we look for the exhaustion. Now, today pretty much marched higher all day, right? So we're looking for these kinds of moves, this kind of move, right, which eventually followed through. Terrific. But a lot of you are noticing aggressively on up days, the market will bounce off this average line here. That's something else we'll talk about. It's a little bit more aggressive. It's a little bit, I won't say advanced, but it's just a little bit more, as we say, aggro. It's another way to play the moves. And this is something we'll continue to do. I do place it on a 1-minute chart. Let me show you another example. This was right before the close. And you can still see the notes that I have here on the screen from the chat room. All right, so another example here. Different market, this time the Russell. Nice horizontal space. We get up into the volume weighted average price zone. Make sure the EPMR, the expected price movement range, is also showing that these are resistance zones, which we had both of those kicking off. And then that's your short. And that's it. And then your target, by the way, we're looking for the target of the average here. And once again, when the market does want to rally, it's kind of uncanny how often, if we don't get down to this level here, we only get down to the average, how often in a much more persistent bullish market we'll bounce off the average, not from, if we don't even get down here, it's a good place to look. But I would still want to see some sort of relevant expected price movement range support down in that area. But again, it's a little bit more aggressive. But I've been wanting to share this with you all. This is not complicated. It's a simple way to adapt to the increase in volatility. Check it out. I'm making this available in the recap video because, quite frankly, whether you're a member or not, I want you to play around with these. I want retail traders to win in this market. There's so much garbage out there that, if I can find a tool that is readily available, it's usually pretty much built in to most platforms, and you can at least try to pinpoint levels on a short-term time frame like this, that might help, and I hope it does help. Check it out. Experiment with it for a few days or a few weeks and see how you like it. So there you go. I'll see you in the next update.